stock market surges amid speculation of Trump tariff compromise. Wall Street reacts to potential tariff deal. U.S. stock futures climbed early Wednesday as optimism grew over a possible agreement on the Trump administration's tariffs, which have been affecting trade with key international partners. Investors responded positively to the possibility of reduced tensions between the United States, Canada, and Mexico, which had been at the center of recent trade disputes. Futures for the Dow Jones Industrial Average increased by 126 points, or 0.3%, while the S&P 500 and Nasdaq 100 recorded gains of 0.4% and 0.5%, respectively. The rise came after Commerce Secretary Howard Lutnick hinted during an interview that the U.S. might find common ground with Canada and Mexico, suggesting a middle ground solution on tariffs. This statement followed the official implementation of U.S. tariffs on imports from both nations, prompting immediate retaliatory measures from Canada and an expected response from Mexico later in the week. Market volatility amid tariff uncertainty. The stock market suffered significant losses on Tuesday due to tariff-related concerns. The Dow Jones plummeted by 670.25 points, while the S&P 500 fell by 1.22%. The Nasdaq Composite, which is heavily weighted toward technology stocks, declined by 0.35% after falling more than 2% at its lowest point during the session. The Nasdaq came dangerously close to entering correction territory, defined as a 10% drop from a recent peak. Trump's unpredictability introduces volatility into the market, said Michael Green, chief strategist at Simplify Asset Management. A single tweet or a brief policy statement can dramatically shift market sentiment. The ongoing trade war and retaliatory measures could pose long-term risks, but their full impact remains uncertain. He added that escalating tariffs might result in restricted consumer spending, which in turn could hinder economic growth and employment levels. During a congressional address on Tuesday night, President Donald Trump acknowledged the market's turbulence, referring to the tariff situation as a minor disruption. He reaffirmed his stance, stating, "Tariffs are about making America rich again. This is part of making America great again, and we will see the results sooner than expected." Economic indicators to watch. Investors are closely monitoring key economic data scheduled for release on Wednesday. Reports include the ADP Private Payrolls Report for February and the latest Purchasing Managers Index, which will provide insights into the state of the U.S. economy. Corporate performance highlights. Campbell's revenue misses expectations. Shares of Campbell's fell by more than 5% in pre-market trading following disappointing revenue results. The company reported $2.69 billion in revenue, falling short of analysts' expectations of $2.74 billion. The weak earnings outlook for the year further dampened investor confidence. Automakers rebound on tariff optimism. General Motors, Ford, and Stellantis saw pre-market gains amid speculation that the administration might soften its tariff stance. GM and Ford climbed 3.9% and 1.8%, respectively, while Stellantis surged 5.7%. Commerce Secretary Lutnick indicated that a potential tariff compromise could be announced soon, which would ease the burden on automakers that rely on imports from Canada and Mexico. European stocks open higher. Markets in Europe opened positively on Wednesday, led by Germany's DAX index, which surged 2.8% after a political agreement that could result in increased infrastructure and defense spending. France's CAC 40 and the UK's FTSE 100 also gained 1.8% and 0.5%, respectively, while the pan-European stocks 600 climbed 1.2%. Volatility index rises. The CBO Volatility Index remained above 20 for the seventh consecutive session, reflecting heightened market uncertainty amid ongoing trade negotiations and economic concerns. This marks the longest stretch above the 20 level since October, signaling that investors remain cautious. Analyst outlook on market risks. Analysts at Capital Economics warned that, while market fears over tariffs may be exaggerated, the risks to U.S. financial markets have increased. If President Trump shifts course, the market reaction could reverse, said economist Jonas Golterman. However, the tariff rate is now the highest it has been since the late 1940s. and if additional levies are introduced, the economic landscape may become more uncertain. Biggest movers after the closing bell, AeroVironment. The unmanned aircraft manufacturer saw a sharp 16% decline after issuing weaker than expected full-year guidance. CrowdStrike. The cybersecurity firm dropped 9% after projecting lower than anticipated revenue for the upcoming fiscal year. Ross Stores. The off-price retailer saw a modest 1% increase, following strong fourth-quarter earnings. Stock futures continued to climb. As of late Tuesday evening, U.S. stock futures showed signs of recovery. Dow Jones futures gained 275 points. S&P 500 futures increased 0.7%. Nasdaq 100 futures rose 0.8%. Embra A. Incerteza persista. Os Investidores Continuum, Esperançosos, de que uma resulta da disputa comercial passa estabiliza os mercados no curto prazo. Sobre negociações dados econômicos e sine do Federal Reserve. Stay updated on market moves. If you want to stay ahead of the latest financial news, stock market trends, and economic updates, make sure to subscribe to our channel Unfiltered Truth Report on Rumble and YouTube. Hit the like button and turn on notifications so you never miss a crucial update.